Testing, testing.
Yep, we can hear you.
Awesome.
I'll leave my phone out here. Actually, I'll send you a Slack note.
Welcome to the space. We'll get started here in a few minutes. Hey all, thanks for joining. We'll get started here in a few minutes. Looks like we've got our co-hosts joining here, Ryan and Will. Feel free to request speaking, and we'll get you added here.
Done. Test.
Awesome. Welcome aboard. Glad to have
All
you.
right, thank you.
We've got Markus here as well.
Hello, hello.
All right, we've got some people continuing to trickle in, but I think it makes sense for us to get started. I'll start with an intro on myself, then I'll pass it off to our co-hosts to introduce yourselves as well. I'm Matt. I lead sales and partnerships with a focus on fintech here at Para. Para provides a comprehensive suite of wallet and authentication products for developers building on-chain applications. Para makes it easy for users to onboard and transact without the traditional friction of seed phrases and browser extension wallets and mobile apps. I'll toss it to Markus for a quick intro.
Amazing. Thank you so much. Can you hear me?
We've got you.
Perfect. Great. Thanks so much for having me, and thanks so much for organizing this. Very happy, as always, to talk about stablecoins and FX. My name is Markus. I'm one of the founders of Mento. I've been working in the Cello ecosystem for many years now, and then around 3 years ago, we spun off Mento, first as a stablecoin platform and now focusing much more on the FX side of things. In the end, building more FX infrastructure so that users globally can swap between different stablecoins. With Mento, we now have 15 currencies live, and we can also integrate non-Mento stablecoins. Of course, we've integrated USDC and USDT, and we allow users to swap at the FX rate with Mento. And yeah, very excited to chat a bit more about FX and stablecoins.
Awesome. Thanks for coming. Let's go to Ryan.
Hey everyone, my name is Ryne. I'm the CEO of Eco. Eco is basically a stablecoin interoperability platform. So we aggregate a bunch of stablecoin liquidity between the major assets and the major chains, and then we ensure that those chains and those issuers have really fast intent-based stablecoin bridging, and we add a programmability layer on top so that you can compose various cross-chain actions into just a one-click stable send. The thesis being that a stablecoin can get you anywhere you need to go on chain these days. It should be good enough, and that's what Eco enables.
Awesome. Thanks for the overview. And last but certainly not least, Will.
Hey everybody. So I'm Will, CEO and co-founder of Haraka. Haraka is basically a community credit protocol. So we provide financial services like savings, lending, etc., primarily to folks in emerging markets who may not have other options or access to the traditional financial sector. So you can think of us a little bit like an application layer on top of stablecoins. Like we try to answer the question of like what happens after stablecoin adoption is more mainstream. And we think that there's a lot of really cool application solutions and models that are uniquely enabled by the technology. And so really excited about this conversation. I've been nerding out on FX, on-chain FX for a while. And so it's great to see a lot of interest and excitement around this topic.
Awesome. Great to have you, Will. I thought it might be fun if we start with an icebreaker where there's like really no wrong answer. If you were a stable coin, which one would you be and why? Anyone's happy to take this. I'm happy to start calling on people if that's easier as well. Markus, do you have thoughts on this one?
Ooh, this is so difficult. Do I want to be the biggest one? Do I want to be again another dollar one, or do I want to be a local currency? Actually, we've been thinking about local currencies for so long now. Therefore, I wouldn't say a dollar stablecoin. I actually will say I want to be CCAS, the Kenyan shilling stablecoin on Mento, because I think it's really amazing to see what communities can do. It's also amazing to see, Will was already mentioning they're working on, for for example, lending as well, and also micro lending, what local currency stablecoins can unlock for entrepreneurs in these countries, just by being able to get a loan in local currency. You already get rid of the FX risk for the borrower. So I think that is really, really impactful, and therefore I would say I want to be a Kenyan shilling stablecoin.
All right, love that answer. Kenyan shilling. What's the ticker on that? Is that CKES?
Yes, exactly. CKES.
All right, love it. I love the non-USD option here. Ryne or Will, if you're a stablecoin, which one would you be and why?
Well, I'll give you first choice if you want it.
Yeah, I feel like my answer is a lot less thoughtful than Markus. My initial thought was like, I'm probably going to be Tether, because I am basic, maybe a little controversial, and full of secrets. So yeah.
And
Wow,
super rich.
love that. Love that. I was hoping someone would pick Tether.
Nice. All right, the two that come to mind for me are actually USDE, if that counts. Can synthetic dollars count?
It counts.
If not, then I would go with Frax. Shout out to the more experimental models. On the Frax side, Sam's been in the game for a long time, believes in stables as much as anybody, got the track record to prove it. I respect that. I guess on the Athena side, it's a big day for them. So good timing to call them out. And just like obscene execution from that team. And I actually think that Athena kind of like jogged stablecoin season 2, right? Because stablecoins were dead after FTX for a year or so. Not in our minds and hearts, but definitely in the market. And they came in with a new model, and I think inspired a bunch of others to enter, which I really respect as well.
Love that. I also love the mention of stablecoin season 2. I think it's a good segue into our next topic of like, there's been a really big surge in discussion around FX and stablecoins lately. And I think definitely ushering in a season 2 of stablecoin narrative. I'm curious your perspectives on what's driving this narrative and like why now is this becoming such an important topic? Let's start with Markus again.
I mean, a lot of this is always driven by regulation. This is the boring part of the answer, that in the end, we're seeing more and more regulation in the space that enables institutional use cases. We have the Genius Act signed into existence. We have MiCA already being live. We have regulation on stablecoins in Singapore. We have like much more openness in Korea. So all around the world, it's becoming clearer and clearer that also the regulator has to work with stablecoins. Next to the regulator, the second part is the incredible success also of the two big ones in the space. Will USDT being one of them, and then USDC the other, with Circle's IPO. I think also in institutional finance, stablecoins is becoming a household name. So it's already clear, okay, stablecoins in some way in Web3 have product market fit. And now the big question is, where is this going? What are the big things that come from here? From our perspective, and this is part of the title of this talk, or of this conversation here, FX is, I think, one of the next spaces where stablecoin will take place, and a huge opportunity for all of us in Web3, because FX as a market is by far the largest market in the world. It's like Bank for International Settlements estimates the FX market to be at $7.5 trillion trading volume every single day. And this, even though it is the biggest market in the world, it's still mostly running on old rails that are not live 24/7, that don't exist between certain countries, and that often are not accessible to many people. And therefore, FX for me is like the perfect next wave of adoption for Web3, because FX really needs new technology. But yeah, I think in the end, the success of the large stablecoins out there and regulation advancements really laid the ground now for another stablecoin summer.
Awesome. Love that. I think regulation definitely circles IPO. I think it's definitely driving a lot of hype, and definitely the FX opportunity. Ryne, Will, anything you want to add or comment on there?
Not much. Markus, definitely the expert on the FX side. All I'd just say is like all this gives sort of the aura of inevitability to this technology, right? The dollars are rushing on chain to stable coins, and it's only natural for people to think about, okay, sort of when does that drag other currencies into the game as well? So floodgates are open, I think.
Yeah, +1 to the previous speakers here. I think the other kind of only other thing I'd add is like, I've always believed that like the mother of innovation is necessity. And when you look at the TradFi side, like the FX markets are some of the most broken when it comes to like traditional TradFi, especially when you get to more, I would say, exotic currency pairs, right? It's very expensive to swap between two like non-US like currencies. It's very, and like when you think about things like hedging solutions and like contracts and swaps, all that stuff, it becomes even more cumbersome and inaccessible for folks, right? Like even if I wanted to like develop appropriate FX strategies, say I'm a multi-currency company, those options aren't really available to me unless I'm at a certain size or scale that like, I don't know, a JP Morgan would treat, right? And so this creates a massive opportunity. Not only is the technology really fit for this purpose, but also there's a massive gap here. And so I think these two things are creating the necessary conditions for season 2.
Awesome. Yeah, I love that. I couldn't agree more. I think the traditional FX markets definitely broken. Starting to get into that as being the key driver here for stablecoin season 2. I'm curious if you guys can comment on like on the advantages that crypto brings to the FX markets that the traditional systems really can't match or aren't meeting today. Maybe let's go back to Will.
Yeah, I can take this one, or at least start it off.
Please.
I mean, there's a few. One is like the fact that with crypto, you can have markets that are like 24/7, right? And that's pretty important, especially when you talk about like FX, because literally it's global, right? You can't, you're going to be interacting with different companies, solution providers, like from around the world in different time zones. So that's pretty important. The second thing is accessibility, right? So I actually looked into this, right? Because we do have, we are running a multi-currency company with Haraka. A lot of the capital we raise are in hard currencies like US dollars. And a lot of our assets, our loans are in soft currencies like Kenyan shilling, right? And so because of that mismatch in liabilities and currencies, we have exposure to FX risk. And so I would say I'm like, on the more sophisticated side when it comes to like understanding how to model that out. But even if I could come up with the perfect strategy, if I wanted to go out and basically hedge my bets, it's very, very cumbersome, right? Like I was speaking to FX clearinghouses who and presenting them the problem, and they're like, great, we could help you out, but it's going to cost you an exorbitant amount of money, and you need to have $5 million minimums, right, for these contracts. And so that just prices most folks out of the market. With the opportunities to build a decentralized system for swaps, for hedging, for all these other solutions, I think it's going to bring a lot more people into the space, because this is something that people want, right? People want a way to not have to worry about FX fluctuations. For most projects, this is non-core to their business. This is exogenous risk, and this is not something that's very well suited in-house. So I believe that if you have a solution that's available, that's accessible, that's easy to understand and transparent, there's going to be a lot of demand for something like this.
+1 on
Awesome.
basically the difference between the hard currencies and the softer currencies. But even between hard currencies, having only a dollar stablecoin as an option doesn't work in many countries. I mean, just since January, the dollar lost 15% against the euro. So businesses in Europe that would accept dollar stablecoins would actually accept, in that comparison, a soft currency. because they would have like a 15% in half a year FX risk. And if you look at other currencies like the Swiss franc or the krona, here the dollar lost even more. So it's not only between basically the hard currencies and the softer currencies of the world. It's like that FX risk is real in every region of the world, and therefore we need to build infrastructure that allows businesses in Europe to be paid in euro, or in Singapore to be paid in Singapore dollar, or in Japan to be paid in Japanese yen, and not bear any FX risk. And therefore we need to build that infrastructure on chain that these businesses can actually start to work with stablecoins. That is part one. And then Will already said it, there's like no 24/7 markets in the traditional FX markets. But I would also add, also settlement times are super long, especially when you're not on like the super like built out rails. So for example, if you're and probably also Will knows this better than I do, it's like if you want to go from a Kenyan shilling to a Ghanaian cedi, in Kenya, you probably need to go via the dollar. And if you have to rely on traditional banking rails, then you have a T+2 settlement, which means if you go directly if you go from a Kenyan shilling to a Ghanaian cedi via the dollar, you have 2 times T+2 days settlements. So it already takes you a week. And if we bring this on chain, we can have this instantly, which can unlock a lot for businesses in these regions.
Awesome. Yeah, so I think that the biggest advantages we've highlighted here, global 24/7 trading, and accessibility being a huge one, accessibility to FX hedging, and access to any local currency. Ryne, I'm curious if there's anything else you want to highlight here in terms of advantages that crypto bring to FX markets.
I think once you have the liquidity, you can start to think more about programmability of it all, right? It's always on. It should be, it's theoretically, you should have way more powerful tools to sort of like hedge against a lot of FX movements and compose on-chain actions against FX movements. We're kind of just like training for it right now when you try to control for slippage across chain in different DEX pools, right? And so I think that the ability to sort of like program your transactions across the FX liquidity profile that you may need is something that's incredibly powerful. It's just not quite ripe yet until you have the liquidity available. But that's something I would point out.
Absolutely.
Could I add one to this?
Please.
Yeah, so like I think it's really interesting the framing of the question, like how does this compare to like traditional systems? And I think to some extent, like it's a false comparison to compare like, hey, on-chain FX to say like the TradFi FX clearinghouses, because for a lot of people who are say in the small to medium enterprise size, I mean that option isn't even available to them, right? And so we were doing some research about this, and a lot of people who are trading between like Kenyan shilling and Ghanaian cedi or other sort of like kind of like solutions like that are doing this kind of like manually, like a very common behavior we see are people kind of creating these like WhatsApp groups or Telegram groups that are basically doing this like peer-to-peer FX trading and swapping totally like on their own. And so I feel like comparing on-chain FX to already like what's happening, which is like a very decentralized peer-to-peer system, it's like a natural extension, right? And so to a large extent, we're not even competing against the traditional financial system. We're competing against like the crumbs that system has left over, because that's what is available to a lot of people in this moment.
Absolutely. It all comes back to accessibility, and it's really creating a bigger pie for everyone to participate in, rather than the siloed institutional approach that we've had in the past. Now that we've brought up a variety of different stable coins, especially different local currencies, whether it's the Kenyan shilling or euro stable coins, US dollar stable coins, we start to get into this challenge of fragmentation. And I'm curious how you all think about fragmentation. I know crypto is often praised for its interoperability, but especially when it comes to stable coins, it seems like there's a new one launching almost every day or at least every week. Do you feel that we're headed towards greater unification, or more like deeper silos that might be more use case specific for these stable coins? Maybe we'll start with Markus on this one.
Yeah, and I mean, it's a good point. We see mostly a dollar stablecoin launching every day, and now probably every fintech project in the US is thinking about launching their own dollar stablecoin. So here we see a lot of fragmentation for sure. I think the first thing that is important here to fix, I would say, liquidity for these stable coins, we need to fix the infrastructure around liquidity. In the end, liquidity has probably two sides to it: being able to access an asset at the right price, but also in the right amount. And here, often, for example, on-chain infrastructure that we have today is not the right infrastructure for these FX markets. I would argue that, for example, AMMs as the predominant pools on-chain are not the right infrastructure for FX markets, because the price of a euro in dollars or of a yen in pounds is determined off-chain. And the AMM is not the most efficient way how to mirror off-chain pricing. So I think, yes, on the one hand, we see fragmentation, but on the other hand, we also see advancements in like more efficient ways how we handle liquidity, more efficient pools on chain, more efficient infrastructure, and then also more players coming on chain with better regulation. That there is a lot of demand for then probably also different currencies. I don't know if there's enough demand for thousands of different dollar stablecoins, but I'm sure that there's demand for different currencies in general.
Absolutely. Ryne, do you have thoughts on interoperability and fragmentation and how the space is evolving?
Yeah, I mean, 100%. This is really where eco sits, at least in the dollar stablecoin landscape. First take, it's going to get worse before it gets better because of all these things launching. The only way we kind of make sense of that ourselves is we look at the data and we see that, 99% of stablecoin flows happen on a few major assets and a dozen or so, maybe a few more major chains. And so we really try to optimize liquidity for those flows because they're pretty durable. And then, we'll look at the emergent market and the new entrants over the course of the next 12 months and see who makes it stick and see who enters kind of that majors arena and figure out how to support them as well. But that's the way we sort of make sense of it today. I think that you got to let the new entrants sort of like duke it out to find their niche and figure out whether that's ultimately something that's composable with our platform. We want it to be. We want our platform to be a place where the new entrants can sort of continue to grow and earn market share. But right now, the data points us toward the majors. I just think that it gets worse before it gets better dynamic is going to play out for the rest of the year. I do think like a piece of critical infra is in the stablecoin clearinghouse regime, and that's going to be necessary to make a lot of these longer tail dollars your dollar, right, and keep them that way. This like fungibility problem across these stable coins that are all kind of treasury backed and across different chains is going to be something that's important to solve. I really, really hope that we're able to solve most of that problem on chain. The bank issued stables may sort of like come up with their own proprietary solution in consortium for this, but the on-chain native stables, I hope, sort of can solve this among themselves. I hope that Eco plays that role. We don't call ourselves a stablecoin clearinghouse per se, but we should have a lot of liquidity to provide to it and to help flow sort of to and from whatever construct that looks like. But I think it's going to be necessary to kind of make sense of this maze, right? Because as you guys have said, you're adding a row and a column to the fragmentation matrix in the stable space literally every day, seemingly, definitely every week. And there's a lot more to play out there with a lot more infra that needs built to ensure they're fungible and to sort of like keep user experience sane over the next year.
Absolutely. Will, I'm curious how you think about this at Haraka, since you're interacting with a variety of stables in a variety of local currencies.
Yeah, I mean, from our perspective, I think there's obviously a lot of network effects and benefits to consolidation, right? Like just from a liquidity perspective, from like an infra perspective. And so I think that the natural gravity is toward consolidation, but there are countervailing impacts here, right? Obviously, we're seeing a lot more institutions kind of jump into the stablecoin space. Like I went to StableCon a couple months ago, like a stablecoin conference in New York, and I was surprised how much of that room was non crypto, non DeFi, more TradFi. All these regional banks in there, these state governments, just like other players who basically see a bag, which is like, hey, let's monetize the float, and let's see how we can do it. And so it'd be really interesting to see how equilibrium shakes out. I do think there has to be some level of consolidation. But I wouldn't be mad if the world looked like something kind of like, I don't know, like credit cards and like payment networks where you have like a few folks like, I don't know, MasterCard, Amex, Visa, but every company or every brand or whatever can issue their own credit card. It just has to kind of like funnel into something broader. I mean, that could be cool, but I do think there are some massive infra problems that need to be solved for that to happen. But all to say, I agree with what Ryne was saying. It's going to get more fragmented and messier before it gets cleaner. But I do think that the winds are probably shifting towards some sub level of consolidation at some part of the stack.
Super helpful. We've introduced some of these maybe limitations of crypto as crypto starts to consume more of the FX landscape. I think the one Marcus highlighted was AMMs. Ryne, you mentioned we really need more of a clearinghouse for stable coins. I'm curious if there are any other criticisms of crypto rails for FX or any other areas where we need to make considerable improvements on infrastructure in order for us to really deliver on this promise of stable coins and driving accessibility and driving adoption globally. Ryne, I know you have to jump here, so maybe we'll go back to you for this one.
I have kind of a nerdy one here, and I can hang a few extra minutes. But something that no one's really paying attention to right now is that a lot of the interop underlying stablecoin flows has a sort of like a not yet active fee switch. Because this is a nerdy take is at some point in time, these protocols are going to have to monetize their tokens. They're going to have to flip the fee switch on, and that's going to introduce new slippage into the fungibility equation. Right? It's gonna sort of be something you have to price into keeping your dollar across chains. And I would have to sort of like deal with that when it comes. There's a cost structure right now for moving stablecoins around that's pretty tight and pretty heavily subsidized. But over time, there's going to be more pressure on some of the underlying protocols to capture unit economics on money movement, and we'll see what that looks like. But it might kind of like it might make the need for some sort of agreed upon framework or fungibility solution rather imminent when it happens. And so it's kind of not like a deficiency to infra today, but it's like a thing that I feel like we're staring down and not really paying close attention to that's going to affect the cost structure of the entire market.
Absolutely. I think that's a great one. Yeah, fee switches, I think, are going to be a very popular topic over the next 6 to 12 months as we have a lot of on-chain protocols looking to generate revenue either for the first time or accelerate revenue growth. Marcus or Will, any other maybe criticisms or gaps that we need to fill in crypto in order to realize the stablecoin adoption?
I think the fee switches is like really a good one because I mean there's a lot of like posts and research and everyone saying, especially in the dollar space, there's a race to zero, especially when it comes to how much does a stablecoin offer have to forward in terms of yield to their users to actually still gain some market share. And here the business model just earning yield on collateral, which is dependent on the interest rate environment, is probably getting like more and more difficult, and therefore this fee switch, I fully agree on that point. And maybe something we are also not or still not paying like really close attention is that a lot of these stable coins that are out there are fundamentally very different, also in terms of what the collateral of these stablecoins out there is. And these fundamental differences are not really priced. I think we have been talking before about fiat-backed stablecoins are actually credit-backed stablecoins, because the fiat collateral sits probably in a bank or with a counterparty, and that counterparty has a counterparty risk. And then sometimes this counterparty risk materializes. For example, when Silicon Valley Bank went sideways, it materialized. And I think these inefficiencies, or basically the risk of the different setups, is not really priced. A lot of the stablecoins are just trading at one, as if they were worth one, even though based on the whole setup and the risk involved, it's maybe not one. And currently, I think the market is not really efficiently pricing them.
Great point. Will, any thoughts here?
Yeah, no, I agree with everything I said before. I definitely think more standardization, more kind of like analytics knowledge, I think is going to definitely help adoption. I think one thing that we're not talking about, and I know why, because this is kind of like a champagne problem, but like what happens if we're wildly successful? What happens if stablecoins and dollar stablecoins become like very available around the world? Like, what does this do to, say, macroeconomic policy for specific countries? What does it happen for a country's ability to kind of control their own capital? Like, I do think that we are too small for this to be like a serious concern, but there are certain countries like, I don't know, like Turkey, that are starting to kind of grapple with some of these questions. And so I think if we don't have a great answer for it, we're going to run into some problems and honestly pushback from a lot of governments, from a lot of regulators, from a lot of different players. And so, I mean, it's also fun to think about, but I do think that that is a scenario that we should be talking about. There are good and bad that comes along with it, but I think it's worth considering. What happens if this is all really successful?
I think that's a great point. Yeah, I think maybe we should all spend more time thinking about what happens if we're wildly successful. And I think this definitely comes back to kind of where we started talking about regulation. And I'm curious, given the, I think, significant progress we've made with Genius and with MiCA and regulations in Singapore and Korea, what's the next domino to fall, if you were to speculate? Like, what's the next stablecoin related news that you think pushes the space forward in the next few months?
I would guess it's probably like more announcements like the Robinhood type of announcements, where we see large institutions enter the game. And I think that is probably the next domino to fall. That is basically, we see more and more of these announcements. From my perspective, also based on regulation, of course.
Absolutely.
$1 billion market cap.
$1 billion market cap's a good one.
$1 trillion market cap, yeah, for stables.
Sure. Yeah. Hopefully we get there pretty quickly. Will, anything else you're looking forward to?
I mean, honestly, I think I would plus one to Markus's institutional adoption thing. Like Circle's IPO was one of the most successful we've seen in like recent history, right? And so that's definitely opening up skies, and people are like looking at their own internal processes, their own internal like products, and being like, hey, could we follow suit? And so I am expecting, like Ryne said earlier, just to be like to see a wave of new issuance very, very soon, and we'll see what happens after that. But I feel like that's probably gonna, I wouldn't be surprised to wake up the next day and see like, I don't know, so-and-so state, so-and-so regional bank, so-and-so X, like issuing like new stablecoin Y that yeah, kind of pushes us forward a little bit.
Awesome. Absolutely. Well, we're running up on time here, so I guess I'll give everyone a chance for some closing thoughts. I would love to hear kind of either something you're excited about that one of your companies is launching, whether it's from Mento or Eco or Haraka, or something that you think we should look forward to in the stablecoin space, and how we can stay tuned. Let's start with Ryne.
Yeah, trillions again, right? I think that there's going to be an interesting wave of stable chains, quote unquote, launching the rest of the year. You know, Plasma Stable, Codex, Converge to some extent, maybe one or two others I'm missing. It's going to be really interesting to, as long as the macro environment holds up, it'll be interesting to see kind of how they ride the current wave. I think you're going to see some really successful launches there. Eco will be in that midst to try to sort of support them and serve a lot of that volume. But I'm really looking forward to kind of like that new category emerging, and we'll see how they compete. We'll see how they sort of find their niche, and we'll see what sticks. But that's definitely going to be a sort of like meta in the market this fall, I think.
Absolutely. Will, closing thoughts.
Yeah, no, I'm just super excited. I think we're seeing so much change in adoption. Like stablecoins are clearly I would say the first non-speculative use case of crypto that has really found product market fit, right? And a stablecoin in and of itself, it's its own product, but I also see it as a rail, right? And I think that what's going to be really exciting is to see a wave of applications, a wave of models that weren't possible before being built on these stablecoin rails, right? Just like, I don't know, mobile money built off of the infrastructure that the mobile phone adoption provided, or you saw this like iPhone apps coming in after like the iPhone became popular. I think there's a lot of really cool new businesses and new business models that can be created with stablecoin adoption, and so that's what I'm really excited about, like creating something that's uniquely possible because of Web3, and not just porting over tried models from like Web 1 or Web 2 that, I don't know, we have its limitations and we're fully aware of them. So yeah, I'm just excited about that wave of innovation.
Awesome. Me too. Markus, go ahead.
Yeah, and I fully share the excitement with my friends and colleagues here. In the end, very exciting space. We see constant growth. I think there's a huge need for proper infrastructure. So I'm really excited that we're here also in this AMA or in this X space with so many like talented projects and builders, which really excites me in general about the space. On the Mento side, we want to make FX infrastructure governable and give ownership and incentives in terms of like being part of on-chain FX to more projects and users out there. So there's a Mento token launch coming up that we are really excited about. In the end, we want to build that infrastructure that we're building for every or any ecosystem out there. And we want to partner with as many as possible people here and projects here in the space to make this happen.
Awesome. I'll take the chance to say from my perspective, I'm really excited to be leading the forefront at solving this fragmentation and liquidity issues. Para is the only embedded wallet provider that natively provides interoperability between applications so that users can take their social powered account to different chains, different apps, and the stablecoins flow with them. So I'm really excited to be partnering with some of the leading ecosystems and teams represented on the call to be rolling this out. And really excited to see the stablecoin season 2 that we've hopefully previewed a little bit for everyone here today. Thanks so much, Ryne, Markus, Will, for joining, and Lily and the Para team for hosting.
Thanks, everybody.
Thank you so much.
Thank you.
Y'all have a great day.